Hi, this is Rich Kasman. I'm the chief economist for the New Jersey Economic Development Authority. Today I'm here with my colleagues Peter Coates and Michael Candela, and we're talking about our latest Economist Corner, which looks at women and women in the labor market in New Jersey and more broadly, and other issues and interesting facts about women in the economy. First piece looks at women in the pandemic labor market. We all know that the pandemic has had very sharp and deleterious effects on the labor market. But for women, it has certainly been more severe than men. Through December, employment fell about 5.7% for women versus about 4.6% decline for men. But the more interesting fact is that it's really at the intersection of gender and parenthood where you see the biggest impacts. For example, for mothers, employment fell about 6.8% versus for dads, it fell about 3.8%. And if you look at employment for non-parents, men and women's employment declines were actually pretty similar. So why is this? We have a couple of thoughts. One being that women took on the role of being primarily responsible for caregiving, and the other is just based on occupational mix. So the bottom line is that this has really been a very tough time for mothers in the labor market, and hopefully the mix of new federal and state programs that are in the offing will help remedy this, as well as just having a stronger economy. Peter, so I know that you covered some facts and figures about women's ownership of enterprises in New Jersey. So what are some of your findings?
So based on the most recent research available, there are a little bit over 300,000 what are known as firms, businesses in New Jersey that are owned by women. And those businesses are split up into two groups. One is employer firms, companies that have employees, and one are non-employer firms, which do not have employees. And women's share of non-employer firms is significantly higher than the number of women who own businesses with employees. Non-employer firms owned by women equals about 40%, whereas employer firms owned by women is about a little under 20%. Both of those women's share of both of those types of enterprises has increased over the past 10 years. And the industries that women seem to be very strong in is educational services. Among employer businesses, women own about 36%, and among non-employer firms, women own about they own over 50%. Again, you see a dichotomy between employer firms and non-employer firms by industry, whereas the highest share of non-employer firms owned by women in the educational is educational services. For non-employer firms, women have a greater share, or greater than 50% share of industries such as retail, trade, healthcare, and also educational services.
Interesting. So some real differences by industry and by employer versus non-employer firms, which are interesting to highlight. Thank you. Yeah. And Michael, so I know that you looked at broader indices of gender and gender equality. So what were some of your findings?
Yeah, so for my portion of the Economist Corner, I decided to look at the United Nations' Gender Inequality Index and the World Economic Forum's Gender Gap Index, which are the two leading indices for global gender inequality. You know, I thought it was important to highlight other fields where there are massive gender disparities, like healthcare and education, and how these organizations are looking at these factors alongside economic variables to gain some insight. I think it might come to a surprise to many people that the United States ranks 46th on the Gender Inequality Index and 53rd on the Gender Gap Index. So in my piece, I break down the key variables that comprise each of the indices and why the US is ranked the way it is.
Interesting. Yeah, so there are multiple ways that the US really doesn't do a wonderful job in gender equality. So it's important to highlight that. So all this is in light of it being Women's History Month. And so we hope you read our piece. I think that there's some interesting tidbits in there. And Thank you for watching the video, and we hope you'll continue to read the Economist Corner going forward.
Bye.